I think public M&A in Asia is off to a good start. This is an interesting time for M&A in the region due to the ongoing lack of capital markets activity. I think businesses and investment professionals are focused on M&A in a way that they previously may not have. I think as a result, we've seen a maturation in the market very quickly. For example, the number of publicly announced M&A deals has increased substantially, particularly out of China. I think we'll see that trend continue this year. Based on the deals we're seeing, it looks like there's still a nice tailwind on that front. I think we're also seeing other regions begin to get active, including countries in Southeast Asia, which have had very strong performance. I think the Asian market is also benefiting, particularly the public M&A space, from the recent availability of debt to finance acquisitions. That's an area that's developing rapidly, and I think the continued outbound investment efforts by countries like China will continue to fuel M&A activity, particularly into countries like the U.S., Canada, and into Europe as well. So I think, as I just noted in the prior question, one of the interesting developments we've seen over the last year is the rise of a nascent leveraged finance business to fund acquisitions. This is an area that has traditionally been absent, particularly from China investment, due to restrictions in China on the ability to secure assets, particularly the ability of foreign lenders and even domestic lenders to make acquisition loans. However, through the spate of recent going private transactions, as well as some other large investments by Chinese companies, we've seen a significant rise in the inclusion of debt in the capital structure in connection with those acquisitions. I think it is a nascent industry right now. It's just starting out, and I think it hasn't quite figured out whether the market is U.S.-based lending or London-based lending or some separate, hybrid combination that'll be Asian-based leverage financing. But I think that's one of the areas this year that we'll see some of the key facets start to take shape, and I think it's an area that will be increasingly active in our deal landscape for public deals. There are a number of challenges to the M&A market, particularly the public M&A space, because particularly in Asia, because it's a region that, while it has its own economic drivers, it's also reliant on what's going on in the U.S. markets and in European markets. I think the good news is, there was some political uncertainty in the U.S. last year with the election and sort of direction of the economy. That's behind us now. The Eurozone crisis seems to have stabilized, although depends on who you talk to. But I think all of those situations have stabilized, and that will allow the M&A market to continue robustly this year. I think the outbound investment from China, that's been a large part of the M&A market. That's always, that's questionable whether that will continue. Although I think you will continue to see a strong outbound M&A investment, particularly larger public companies, which I think will be a key trend for public M&A.